Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 26, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here today we have a very narrow range here already developing today. This range is only 6.75 points, which is 35% of average. At this moment in time, we have about a 19 handle range on a 10-day average, and it's actually shrinking as we head into this FOMC meeting later on this afternoon, as the 5-day average is about 16.8 points. So again, the market's been waiting for this day here, and the expectation is for a hike, but again, it matters what level we are left behind. So we are going to watch the 1 o'clock open price for all the various products we trade. That will give us a very important key level moving forward. The last time we got one was August 1st. That is the price right there, where basically the 1 o'clock open price Central Time, 2 o'clock Eastern, was 28.10 half. Price eventually dropped, bounced off a prior FOMC key level at these lows, rallied, came back to it, bounced again, and ever since we've been higher. These types of levels here provide very, very important pivot points in the market, and they're very important inflection points overall. So jotting them on the chart, understanding where they are is very important. And this right here, again, provides an opportunity for some sort of volatility increase here in the days ahead. We could see overall upside expansion, but first perhaps the move may be down, followed by a continuation up. But overall, this market looks like it wants to continue higher, but how much of a pullback do we see first? This high right here is very important, and we are holding above it. If prices go offered back below that zone, perhaps we come back and test prices below the 28.65. That could be an opportunity to turn it back up. So there's many different scenarios here that this can play out. So what we're going to do is we're going to let this play out and look for the FOMC key level to give us clues in the days ahead. If we take a look at the NQ, very similar, but again, we're kind of at an inflection point here for this market. You can see clearly bears are defending the 76.40 level. Very, very important there. We have upward bias here overall. This market looks poised to squeeze significantly, but at the same time, a breakout can occur in either direction. We talked about the inside value relationship that is developing for the next month. Again, that's straight out of my book, Secrets of a Pivot Boss. That is a very, very powerful relationship right there, a very powerful setup. And it doesn't really give directional bias, but it does give a very high probability of explosive movement to come. And so again, is that again to the upside in the general direction we've been going? Or are these bears right? Do they get paid? Remember, these bears are getting in short, getting in short, getting in short, but with higher lows, perhaps any push above 76.40 starts to squeeze above those highs and trigger those buy stops. So again, very, very close to seeing a very decisive move here in the NQ. We'll keep an eye on the Fed. Let's take a look now at crude oil. Here's a look at crude. Now, crude has been very bullish. And again, I've mentioned my hesitation on being super bullish for crude. I think overall it was gearing toward an upside break, but the manner in which it's done it has been very odd and unusual. Overall, I'm still very cautious at these levels. 72.31 is a very important level in terms of market structure, and it's also important in terms of the key range overall. And right now we're turning down off that zone, and so to reject off that level would suggest more of a pullback, perhaps back toward the previous month's close. That would take you back toward about 70. And again, the key level to watch right now is 71.80s. That's the level we've been talking about in the trading room for the last 3 sessions now, and we are pushing below that zone right now. If there is a rejection of prices below 71.80 and price pops back above, we could see a pullback and bounce back up as price continues to hold in this range. I don't anticipate an aggressive move ahead of the afternoon Fed, but anything can happen. 71.80 is the level to watch. Failing to get back above 71.80 could open up an aggressive move downward. 71s could be a quick target here some point later on down the road today. Alright, let's take a look now at gold. Now I think gold has the most potential to see a big breakout move and go over the next 2 to 3 weeks. The last time we had Fed, or 2 times back rather, June 16th here, we had a similar range where we had dropped down, bounced, and formed a very narrow range. Dropped down, bounced, and formed a very narrow range. The Fed came out on this day. The next day was a breakout attempt to the upside, and that was a failed new high in a downtrend. The day after that, so this is Wednesday Fed, that's Thursday, this would be Friday, a major downside break occurred, and it was downtrending ever since. Again, I've been warning about a potential stop run in this one as well, but this type of behavior can happen in either direction, and that's what I'll be looking for. If we try to break to the upside here over the next day or two and fail, that could be a big signal that we are about to see a downside stop run through the 1190s. Likewise, as I mentioned yesterday, if price were to drop down and bounce first, perhaps that failure would suggest a proper rally for once. So again, I'm more leaning to the downside break. This market has not been able to prove that it can bounce, but anything can happen again, and today's Fed will give us a pretty good potential for a breakout starting today, tomorrow, and into the weekend. So again, we'll keep an eye on this range. Big time potential here. Lastly, let's take a look at Bitcoin. Bitcoin doing what it can to hold the 6,000 level. There's some big time forces of support at this zone, but at the same time we are seeing lower and lower highs that are just getting more and more extreme lower, and the support continues to be the same, and in most cases the break occurs to the flat side. And so again, in most cases this would break down. Now in significant cases where this were to break up, it would be a huge break to the upside. It needs to be significant to the upside. It needs to take out a prior pivot high, and if it were to do that, it would likely spark a new period of strength where we likely start working back toward 9K. So I'm very cautiously optimistic that something like that could happen, given that we are at the point in the chart where something's got to give one way or another. And the fact that we have value here right now, these are at value, suggests that we could, theoretically speaking, take value bid and start a new move higher. So again, very important down here. We're getting to a point where something significant may happen pretty soon. And again, usually this type of pattern breaks to the downside, but we'll keep an eye on both sides here. All right, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.